Alright, let's talk about the US dollar, the greenback. Old reliable, the big cheese of world money. For decades it's been the king, the top dog, the one currency to rule them all. Think of it as the Beyoncé of cash. Everyone wanted a piece. But lately? Oh boy, our dollar has been looking a bit off, like it went on a 3-day bender, and forgot where it parked its global dominance. It's been slipping, sliding, generally doing a downward shuffle. Not exactly a power move, is it? It's less king and more court jester with a limp. So let's get into it. Why is our beloved buck feeling so queasy? First up on our list of dollar-depressing culprits, debt, specifically US national debt, and folks, we have a lot of it. A truly staggering amount. Imagine a mountain made entirely of IOUs. Now make that mountain belch smoke and occasionally cry. That's closer to what we're dealing with. This isn't your oops, I owe my maid a tenner kind of debt. No. This is big league. We're talking trillions. That's a number with so many zeros it looks like it's screaming. This debt has been piling up for years, like unread emails, but much more terrifying. And it just keeps getting bigger. It's the blob of financial obligations. When a government is drowning in debt, it might be tempted to, shall we say, more money. Print it, digitally conjure it, whatever. This is called monetizing the debt. It's like adding water to soup to feed more people. The soup gets thinner, your dollar gets weaker. Next on our tour of economic horrors, inflation. You've probably noticed it. It's that feeling when you go to buy groceries, and the total makes your eyebrows shoot into your hairline. Wasn't this loaf of bread cheaper last week? Yes it was. That's inflation, your unwelcome house guest, the one who eats all your food and uses up the hot water. Inflation is basically a rise in prices across the board. It means your dollar doesn't stretch as far as it used to. Its purchasing power shrinks. It's like your money is on a new diet, a very effective, very depressing diet, where it just keeps losing weight, and by weight I mean value. This isn't a magic trick you want to see. When prices are galloping upwards, the value of your money is trotting downwards. It's a cruel seesaw. And you, my friend, are on the end that's getting a bad view of the ground. Suddenly, saving money feels a bit pointless. Why hang on to something that's losing its oomph every day? High inflation erodes trust in a currency. Fast. It's not just about groceries. It's everything. From gas to rent to the cost of a cup of coffee. Every aspect of daily life gets more expensive. And if wages don't keep up, it feels like you're running on a treadmill that's speeding up. You're working harder, but getting less for your effort. So, what can you do? Investing wisely can help, but it's not a guaranteed fix. Diversifying your investments can spread the risk. And sometimes, just sometimes, inflation stabilizes. But until then, it's a bumpy ride. So buckle up and hold on tight. The economic roller coaster is far from over. For the longest time, the US dollar was the undisputed supermodel of currencies. It owned the catwalk. Every other currency just wanted to be in its shadow. Countries held dollars. They traded in dollars. Oil was priced in dollars. The dollar was the main event, the big kahuna. But things are changing, slowly but surely. Other currencies are starting to get a bit more attention. They're stepping into the spotlight. The euro, for example, it's a big player. And the Chinese yuan. China's economy is huge. So its currency is gaining traction. The king is still on the throne, but other nobles are getting restless. Section 5. Trust issues. The dollar's global confidence wobble, it's complicated. So, we've got debt, we've got inflation, we've got competition. What do all these ingredients bake up? A lovely cake of reduced global confidence. Yes, that's right. The world is starting to look at the US dollar with a slightly more skeptical eye. Like when your friend says they'll definitely pay you back next week and you know they've said that for the past 6 months. Think of the global economy as a very complex web of relationships, and trust is the glue that holds it together. When a major player like the US starts racking up enormous debt or lets inflation run a bit wild, other players get nervous. They start to wonder if that player is still reliable. It's like a credit score, but for an entire country's currency. And ours is looking a bit shaky. Geopolitical factors also stir the pot, things like wars, international sanctions, and political instability. These events create uncertainty, and investors, they hate uncertainty. This erosion of confidence is a big deal. Section 6. What the smart people are saying, or yelling about the economy. In today's fast-paced world, the economy is a hot topic and everyone seems to have an opinion. But what are the experts really saying? Now, it's not just me yelling about this from a brightly lit studio. There are actual experts, seasoned professionals, who have dedicated their lives to understanding these complex issues. People with PhDs and serious-looking charts, and they're concerned too. These charts aren't just for show, they represent years of research and analysis. Let's start with Gail Allard. She's an economist with a keen eye for detail and a passion for fiscal responsibility. And she's been ringing the alarm bells about US national debt for quite some time now. Her warnings are not just cautionary tales, they are based on solid economic principles. She's not subtle about it. Her message is clear and direct, urging policymakers to take action before it's too late. Allard argues that a massive national debt isn't just an abstract number, it has real-world consequences. It can spook investors, causing market volatility and uncertainty. It can make borrowing more expensive for the government, leading to higher interest rates and increased financial strain. Which, guess what, means taxpayers foot the bill. This can lead to public dissatisfaction and calls for change. She says it signals a potential lack of fiscal discipline. This lack of discipline can erode trust in government institutions. A look, we can't manage our own checkbook kind of vibe. It's a wake-up call for everyone to reassess their financial priorities. This, she warns, poses a significant risk to long-term economic stability. Without stability, growth becomes unpredictable and unsustainable, and by extension, to the dollar's strength. Then there's Kathy Jones, another voice in this critical conversation. She's a fixed income strategist, which means she has a deep understanding of the bond market and its intricacies. Which means she knows a lot about bonds and currencies. Her insights are invaluable for investors looking to navigate these turbulent waters. She often talks about the dollar's status as the world's primary reserve currency. This status is crucial for maintaining global economic balance. Jones points out that while the dollar is still number one, its share of global reserves has been gradually declining. This decline is a trend that could have far-reaching implications. She describes it more like a slow leak. Drip, drip, drip. It's a subtle yet persistent issue that requires attention and action. Section 7, Your Financial Lifeboat, How Not to Drown in Economic Uncertainty. Okay, deep breaths everyone. That was a lot of potentially terrifying information. You might be thinking, great, the sky is falling, what am I supposed to do? Well, don't panic by a bunker just yet. There are sensible steps you can take to protect your own financial situation, even when the big economic picture looks a bit blurry. Think of this as building your personal financial lifeboat. First, diversification. It's a classic for a reason. Don't put all your financial eggs in one basket, especially if that basket is the US dollar and it's looking a bit frayed. Spread your investments around. Consider stocks, bonds, maybe real estate. Some people look at international investments, or even a tiny bit of commodities like gold. The idea is to not have all your fortunes tied to one single thing. If one area zigs, another might zag. Second, build and maintain an emergency fund. This is crucial. Section 8. So, are we screwed? The dollar's future and maybe a glimmer of hope? Maybe. So, after all that, the billion-dollar question. Or given inflation, maybe the trillion-dollar question, is a recession definitely looming? Is the US dollar going the way of the dodo? Are we all completely, utterly screwed? Well, the honest answer is, it's complicated, I know. You wanted a simple yes or no, but economics is rarely simple. It's more like a tangled ball of Christmas lights. In the short term, a weaker dollar isn't always a disaster. Believe it or not, it can actually provide a bit of a boost to US exporters, for instance. If the dollar is weaker, American goods become cheaper for people in other countries to buy. So, companies that sell a lot overseas might see a sales bump. It's a small silver lining in a rather large, ominous cloud. But it's there, for some. Long term, however, the picture is less rosy. If the dollar continues its slide, and if the underlying problems, debt, inflation, eroding confidence, aren't addressed, then yes, we could be in for a rough ride. That could mean persistently higher prices for imported goods, which means your stuff gets more expensive. It could mean reduced living standards. But there's always a glimmer of hope. Innovations, policy changes, and strategic planning can turn things around. Communities can come together and new opportunities can arise. So, while the future may seem uncertain, it's not all doom and gloom. With resilience and adaptability, we can navigate through these challenges. And maybe, just maybe, find that glimmer of hope we're all looking for.